So I thought defining trends was one of the easiest aspects you could do within trading. But I get asked this question very, very often. So I had to sit and think, why is there such confusion about finding trends? How are people finding this so difficult? And after sitting and thinking, I realized one of the big problems it's the oversimplification of education these days. So typically, when you come into trading, you watch some videos, you will learn that trends typically have a low, you'll have a higher high, a higher low, a higher high, and a higher low, or vice versa. You'll have the lower high, lower low, lower high, and then the continuation. And that's great, and that is a trend technically. But if you look at the markets, if you've been in the markets for any period of time, whether it be a few weeks, a few months, years even, you will know that trends don't move like that all the time. It's not that simple. I wish it was, but it's not. So sometimes what you will see is trends acting like this, where you will get chop and you'll get different levels of highs and lows, but the market is still moving to the upside overall. So using the typical higher low, higher high technology or technical analysis, how are you going to define this trend? You would initially start thinking, oh, this is a range, but overall the market is moving up. So how do you do this? How do you realize that and capitalize on it? Well, it's a few different ways. And I'm going to show you the ways I like the most. So you can use, I'm just going to get this out of the way because I know trend lines is probably what's popping in your head already. Now, I do not like trend lines. I will only use one if it's very, very obvious on a higher time frame. So let's say we've got a trend line like this. They're very often too discretionary. So you will have someone that draws it like this. You'll have someone else that's looking at one like this. And you'll have another person that's looking at one like this. And it's just, there's too many ways to draw it. And I don't like that. It's a bit too discretional for me. Like I said, I will use it if it's very, very obvious and on a higher time frame, daily, weekly, monthly. But generally, it's not something I'll look to trade with. So what I use primarily is a 200 moving average. But for the sake of this video, I've added some more just so you can sort of visually see how easy it is to gauge trends. So here we have got the 8 moving average. So the one very close to price here is 8. Then we've got 21. Then we've got 50. Then we've got, what's this one? 150. And then we've got a 200. And this just creates this ribbon or this fan. So it's very easy to tell where the trend's going. Now, I understand people don't like indicators, people don't like moving averages, whatever you think, it's a good way to gauge the trend. So here you can see I'm looking to go long on gold. We've had a very, very nice trend to the upside. I mean, gold's been moving up for a very long time here. We've had a pullback into this sort of 100 moving average, previous levels of structure. So why not take a long position if the market's moving up and we've pulled back? Makes a lot of sense. And again, it's not always clear. Like here, you will have periods where the market's sideways, but the moving averages are also just sideways. So they're parallel to each other. So you don't take a trade here. So there is no defined trend. Whereas here, you can very clearly see the fan begins, the market's moving up, and it's a very, very simple way to just see, okay, the market's moving up, the market's moving down. Don't overcomplicate it. There is also another one I like. As I said, I don't like to use trend lines, but a regression trend can work very well. So essentially, you just draw it from wherever you want to start the trend to wherever the trend is currently, and you click go, and that's it. You have now got two parallel trend lines. And again, I don't really like these, but again, they're good, again, just for gauging the direction. It's not necessarily for taking a trade off. It's just to see, okay, is the market moving up? Is it moving down? If it breaks below here, maybe we've broken previous lows, broken out of the trend, so maybe the trend's changing. So there's that way. There is also just the very, very typical way of saying, okay, well, we've got a high back over here. We broke above that high here. So we're now creating higher prices. And again, here we've got previous highs. We've broken above those highs. And it's a case of just saying, okay, well, the market is breaking previous highs and it's continuing to push up and creating new highs, also known as creating higher highs. But again, you will see that this market is not necessarily where we're seeing this type of typical structure that people are often taught about. Here, we're actually seeing a small move down, big move up, small move down, big move up. And then we follow this market until we come to here, where we have a large move down. And people then, if using this idea, will say, okay, the market's now bearish, I'm going to go in for sells. And you would have been liquidated because the market's still bullish. And again, here we've got a lower low, and we've come down and created an equal low. So then again, people might have said, oh, the market's bearish. Now we've broken previous lows, or we've come down to previous lows. Now the market's bearish. That's not the case. You're looking at it in a too simplified way. And this really is how easy trading can be. You don't need to do loads of crazy stuff. I mean, like I said, I don't like trend lines, but if you like to use them and you've had good experience with them, go ahead and do it. I'm not saying they don't work, it's just not for me. But essentially all we are doing, especially the way I trade, is I'm looking for a reason the market's moving up, also known as the drivers or the economics. I'm then looking for a move down. Obviously, if I'm looking to buy this market, I'm looking for this move down, so a pullback so I can buy into it. And we've had that here, so then I'm looking to buy from there. And again, we've got the same setup here where the market's pulled back. I'm still looking to buy gold. So this is a great opportunity to get into that buy position on this pullback within the overall uptrend. But that's it. It's very, very simple. There's nothing complicated about this. This video has been less than 10 minutes, so hopefully you've gained some value. Again, this isn't really a video for experienced traders. This is just to show you how I look at trends and the easiest way to do it without overcomplicating things, because it works and you don't need to do this ridiculous stuff. And just to show you, trends don't move in the perfect ways that you see on a lot of these videos. So hit the like and subscribe. I do appreciate it. You can join the Discord 7 days completely free, or the free Telegram, where we also drop nuggets of information. So guys, I'll see you later. Thank you for watching.